Hey folks, hope everything's going well for you guys today. Welcome back to Matt Money. Welcome back to another episode. We're going to be talking about Warren Buffett's 13th F filing that he gave at the end of December timeframe. And all I basically did was took that 13th F that I found on the internet and plugged it into our Google Sheets that we have here. And this is for anybody to download if they want to put their own portfolio in. I personally track my portfolio like this as well. But before we kind of get into the nitty gritty of each individual stock, I kind of want to give an overview of what Warren Buffett has in his portfolio, what's overweight, what's underweight with respect to the sectors that he's invested in, and then we can actually go into each individual position that he has. So before we really do the overview, let's hop into the overview. All right, guys, welcome back. So, for those of you guys that are unfamiliar with how this overview portfolio tracker kind of works here at the moment, we basically have it set up into two basic sectors, basically, two basic pie charts that we have here. So, on the centermost part, we basically have income by sector. On the right hand most part, we generally have the capital allocation or the portfolio value by sector as well. Now, we also have on the bottom here basically how it sets up with respect to what account it's in. But because we're looking at Warren Buffett's portfolio, we don't know what type of accounts and different accounts he has. We're basically just going to say it's all in one account. But basically, this is what is underneath Berkshire Hathaway's positions here. So, although it's kind of said Warren Buffett's portfolio, this is basically what's underneath of Berkshire Hathaway's investment portfolio that they have, and given the 13F that they do at the end of the year. So that being said, looking at the graphs here pretty qualitatively, which correlates to a quantitative, of course, financials is a massive part. And that's what this darkish green is here. You can see that it's about 41% in terms of the actual value of the portfolio and about 49.5% with respect to income in the portfolio. So that's pretty wild. So that just being said on its own, that's saying that about 40% of this $212 billion here is basically coming directly or invested directly into the financial sector, which is pretty crazy. And actually looking at the actual portfolio income that you see here, that means of about this 4.7 billion that he gets in dividends, he's getting almost half of that coming from the financial companies. And we'll get a little bit more into what companies that is in a minute here. But you can see that the portfolio itself yields about 2.23%, which I thought was pretty light. But keep in mind that not all of his positions pay dividends, and some of them are higher growth stocks like Apple, which is probably dragging down this dividend yield aspect of the portfolio pretty drastically. So we'll get into that in quite a minute here. So speaking of information technology and Apple, you can see that it's about 33.5% of the total portfolio value, but it's only about 16% of the actual information technology income that's coming in. That is obviously outweighed by the financials, which we already talked about, and as well as consumer discretionary. I question how big the difference between this consumer discretionary and consumer staples is, which is this really small red sliver here. You can see that it's a little bit bigger here in the portfolio value aspect of things. There were some things when I was looking up that some of them I believed were probably more consumer staples rather than consumer cyclical, which is kind of the discretionary aspect of things. So I would kind of put these two together at the moment. They're kind of consumer goods, whether you call them, soups or trash bags or whatever. I think they kind of sit under the same kind of bucket, but some of them aren't necessarily day to day needs. Some of them are a little bit more discretionary, hence the word discretionary. So it's not necessarily meaning that they need to buy them every single day, whereas like trash bags and stuff along those lines, a little bit more of like a need on a day to day basis. But that being said, you can see that that is about 15 to 16% of the portfolio in terms of value and just under 30% in terms of income. Now we'll talk about what stocks are in that as well. So very contrary to myself and my portfolio, energy stocks are only about 0.5% of the portfolio and almost 2% of the actual income when it comes to energy positions. Real estate is relatively small as well. That's store capital for those of you guys that aren't familiar with what is in Warren's portfolio. Healthcare is a little bit smaller than I anticipated as well. That's like Johnson and Johnson, DaVita in Warren Buffett's portfolio. So it's a little bit less than 2% in terms of the value. And I can't even really see it in terms of the actual dividends that are coming in. It's such a small amount. But comparing to industrials, this is more like the airlines that he has investments in. Those are about the same with respect to value and income, respectively. 3.7% in terms of value and 3.6% in terms of income coming from that. And then telecommunications, this is all like the radio positions that he owns, like the Liberty Media and things along those lines. I couldn't really find investment or dividend income for those, and I wasn't sure if a lot of those pay dividends or not, which I thought was pretty surprising. But that doesn't really show up at all in terms of income, but he has a pretty decent amount of different positions, and you can kind of see that when we get into it as well. So I was relatively surprised. I thought he would have a little bit more with respect to utilities, which he has no allocation towards. I obviously don't have the amount of cash. I could put the 128 billion in here if I wanted to, because at the moment he's sitting at about 128 billion dollars worth of cash. But he also has is a little bit of ETF exposure that he got into last year towards the end, which I think caught everybody by surprise. But we'll touch a little bit on that as well. But this is really the aspect of things. It's kind of all the things that we've already touched about. Materials, we don't really see too much with respect to materials. And there's actually no income coming from materials, which I thought was surprising as well. But yeah, let's just hop right into the actual portfolio aspect of things and looking at what stocks are in each. So I think the first thing that we should probably look at is how this is basically conducted here to see how we can basically build out a spreadsheet like this. And basically, all you need to do is you have 5 or 6 manual tabs that you have up here. Not all of them are necessary, but if you want to track some things, it does become a little bit necessary because we're going to get a little bit into how this actually feeds into the monthly forecasting that we have in another tab here. But all you really have to do is put the ticker symbol in here, and a lot of these things that don't have manual above them, so basically anything from column I all the way beyond, it kind of automates everything, which is kind of cool. But you do have to input some things like the original shares, the shares now. So obviously, I don't know at what point Warren bought all these. So at the moment, the shares original and shares now are the same. I don't know what price he paid, but I do know when the dividends are kind of coming out, and I know what kind of sector each of these positions are in. So hope that gives a little bit of insight with respect to what we're looking at with respect to the actual portfolio being constructed in Google Sheets here. So cutting into actual information technology positions, because that's probably what people are most likely to be interested in. We'll just highlight this so we can highlight exactly what is in information technology here. And so everyone knows the biggest position that Warren has in general, and as well as for information technology, is his Apple position here. So what you can actually see is there's a crap ton of Apple. I think it's over $67 billion worth of Apple if I were to expand this out here. And what this basically means is, in terms of actual forecasted income, it's about $188 million every single quarter. You can see when it's actually going to pay out with respect to the ex-dividend date and the pay date here. And actual annual dividends is going to be about $755 million every single year, which is pretty crazy. To say the least. And there's some small positions in VeriSign, which is about $2.5 billion or so, and Amazon, which is just over $1 billion, and StoneCo Limited. Now, this is the kind of cool part that this sheet also provides, is an idea as to what the percentage ownership of the company is. And so you can see here that Warren owns about 5.5% of Apple, which is pretty astonishing considering it's a $1.1 to $1.2 trillion company after last week's kind of downgrade. of value in the market here. You can see he owns about 11% of VeriSign and about 8% of Stone Co. Limited, which is pretty cool. Next thing, and the biggest part of the portfolio I think we should probably look at is financials, because that's about half of the value of the portfolio and about half of the income of the portfolio. And this is pretty astonishing as well. You can see that there's a crap ton of dividends and value coming from these positions, a lot of shares in these positions. I mean, just going to go over to the ownership of each of these companies at the moment. You can see these are $100 billion companies, and Warren Buffett owns almost 11% of Bank of America. He owns 18% or almost 19% American Express. He owns just over 13% of Moody's, just under 10% of U.S. Bank Corp. I mean, these are big Fortune 500 companies, and he's owning, massive amounts of a percentage of all of them. He used to own almost over 10, I think he owned over 10% of Wells Fargo at one point, but he has since recently trimmed his position, probably due to the scandals that happened at Wells Fargo not too recently. I'm personally long in Wells Fargo just based off the fact that, I think it's a good value, and they generally speaking are one of the best in terms of financial fitness and, making sure that their debt is in order. But anyway, actual ownership of the positions is pretty crazy. The actual dividends that come from these positions are pretty crazy. You can see, he's getting on the order of, almost $500 million for some of these exact companies. Like, he's getting $666 million a year from Bank of America, $260 million a year from American Express, almost $660 million from Wells Fargo, $200 million from JP Morgan, $200 million from US Bank, and I mean, the list just continues. And so on a quarterly basis, I mean, you're expecting anywhere between 50 to 150, sometimes up close to $200 million from each of these positions. And that's just pretty wild. I mean, thinking about it in that perspective, the amount of vastness that he's accrued in these financial institutions is just pretty crazy over the long term. Now, everyone knows that Warren Buffett is a huge Coca-Cola investor, so as we go to consumer discretionary stocks, it starts to get pretty wild as well. $688 million a year coming from Coca-Cola. That is pretty astonishing. How much does he own of Coca-Cola? I'm just curious. So he owns about 9.5% of Coca-Cola, almost 27% of Kraft Heinz, which is kind of cool. He owns 5% of GM, and he owns 8% of Restoration Hardware, which is pretty interesting. But anyway, going back to the actual amount that he's getting paid out by some of these companies. So not all of them pay a dividend, but Procter & Gamble is getting almost $1 million a year. Coca-Cola is getting $688 million a year. Kraft Heinz is getting half a billion dollars a year. General Motors is getting $114 million a year. I mean, these are pretty wild positions that he's getting some money on. I mean, to put it in perspective, his investment in Coca-Cola alone is around $21 billion. His investment in Kraft Heinz is about $8 billion. General Motors is about $2.5 billion. His Costco position is about $1.2 billion. I mean, just from Costco, which yields pretty low comparatively to the rest of the stocks in his portfolio, still making $11 million a year in dividends. I mean, that's pretty crazy considering that it's relatively small position in the portfolio. Now let's go to energy stocks just to kind of get it out of the way. It's relatively small, and I think that some of you guys have heard some of the headlines about what he's been investing in with respect to the oil and gas sector. So a lot of people know that he's been investing in Occidental. Now, this does not include his 10% preferred share ownership, I believe. I believe that this is strictly just his position in his individual stock position, so his non-preferred shares. So that being said, even with this, he's getting an annual payout of almost $60 million every single year. It's almost $600 million worth of an investment. And that being said, before anything's all said and done, just in his regular stock ownership. So this doesn't include his preferred shares that he has. Over 2% of the company. He owns a little bit under 1% of Suncor Energy. I know that's relatively recently back in his portfolio because it was previously sold out of his portfolio, but I think he recently bought back into it. And one of the cool things that I like to see here is Phillips 66 is almost completely out of the portfolio. He used to own, I think, over 15% of Phillips 66. Now, I don't necessarily know if he saw the writing on the wall and just kind of wanted to get out of the business, saw the risk and the capital intensiveness of the business, or he just made all of his profit and he decided it was time to get out while he could. Because, I mean, he was one of the first investors after Phillips 66 actually spun off of ConocoPhillips, and it made him a fortune. I mean, we're talking he was investing in the $20-$30 range. Maybe it was a little bit higher than that, but just the increase in dividends that Warren Buffett saw from this company over time has made him a complete fortune. And even still, with the amount of shares that he's sold out of, he's still making just under $1 million every single year from it. So, $17 million position, which is pretty cool. But I know he used to own about 15% of the company and recently scaled that back, which I thought was pretty interesting to share to you guys. That sometimes he doesn't always practice what he preaches with respect to buy forever and buy and hold forever. So go into healthcare here. We have Teva Pharmaceuticals, which I think was a relatively recent buy. And you have some Biogen Inc. And then you also have our good old favorite Johnson and Johnson here. You also have DaVita Healthcare, which doesn't pay a dividend at the moment either. But the one that does pay a dividend in healthcare here is this $45 million position in Johnson and Johnson. So it pays just over $1.2 million a year in terms of annual dividends. And curious what ownership percentage he has in Johnson and Johnson. I mean, it's a relatively small, less than a tenth of a percent, 4% for Teva, and almost 31% with respect to DaVita Healthcare. I knew he had a lot of DaVita, $3 billion worth, but I didn't realize that he owned over close to 30% of it. So that's pretty astonishing to see. And what other positions do we really have? Oh, let's look at the airlines because this was kind of cool. So we have some airlines that Warren has here, which I thought was pretty crazy, and because he's historically throughout time been very against buying airlines, but it seems like relatively recently, I believe that's because the earnings of the companies were in such favorable positions that he decided to make basically the price of the companies are making him an offer he couldn't refuse. Now I don't necessarily know if he's up or down on these positions, but cumulatively through these entire positions here, I mean he's got about $8 billion worth in these airlines themselves, and some of them are over 10% ownership. So it's not like he's taking small ownership in these companies. I mean, looking at this in general, you're looking at just under 10% for American Airlines, just under 9% for United, just over 10% for Southwest, and just over 11% for Delta, which is pretty crazy. And all that combined with respect to how much dividends it's paying out, I mean, it's paying out over $170 million worth of dividends every single year, which is pretty crazy. I mean, some of these pay a pretty decent dividend. Some of these pay, 3%, 3.5%. And yeah, I mean it's pretty wild to be said there. And you also have a very small position here in UPS, which should not necessarily be forgotten here. The price to earnings on that is still a little bit higher than I want it to be, but some of these price to earnings on some of these airlines are just absurd, and I can definitely understand why Warren is dipping his toes into some of these stocks here. So, looking at the actual amount that they're up, let's see. So they're all relatively at bottoms here. You can see that here we have the 52-week low price for a lot of these positions and the percentages that these companies are off their 52-week low. And so just looking at this, I mean, we're looking at, within the past year, they're at the lowest price that they were. I don't necessarily know if that was on Friday this past week, that they dipped down to that and they kind of rose up towards the end of the market or the day, because a lot of these companies did that. But yeah, that's relatively pretty interesting to see that a lot of these companies are down here at the very bottom. Now, One of the things that I wanted to highlight here was telecommunications, because I don't necessarily know if this is a mistake on my part or what, but there are a lot of different companies that he has investments in, and I've seen this before where it's kind of this Liberty Sirius XM group that he owns a decent chunk of change of, and really the only one that pays any sort of dividends is Sirius XM. So I don't necessarily know if that's a mistake. I tried looking at some of the websites here because I do get a lot of the information from these websites that automatically pulls into the Google Sheet here. And generally speaking, there's no problems. There are a few companies that give me some problems, but most of the time I'd say there aren't. So I looked at Charter Communications, I looked at some of these other ones, and I know for a fact they don't pay dividends, but it just finds me uh, I just get a little bit interested as to why he has so much of this capital and such a large ownership in some of these companies that historically for telecommunications pay a little bit more with respect to dividends. That being said, these are not necessarily telecommunications, these are more like radio broadcasting. So I don't know if he's necessarily going for growth in these organizations or what. And I know he probably got a decent chunk of change, and I believe it's because a lot of these were spun off of SiriusXM. But that being said, I don't necessarily have an idea as to what's going on with these positions. So if you have an idea, please leave a comment in the comment section down below. But I mean, he does own a substantial amount of all these. I mean, SiriusXM on its own, 3%, but a Liberty SiriusXM group, C class shares, A class shares, and some of these others he's got about 14-15% in, and some of these others he's got 5.5% in. So relatively interesting to see that. And I think the only one that we have remaining is really ETFs, which I think is a relatively new position for Warren. We have store capital under real estate if we really want to give that a quick look. So he owes a pretty big amount of this. I think it's close to 10%. So 7.5% of store capital. I can understand where Warren comes from with respect to not necessarily wanting to invest in real estate investment trusts. You have to think that he doesn't really have a tax advantage account like a normal individual investor would. And so it doesn't necessarily benefit him from a tax standpoint to be investing in these sorts of companies, just due to the fact that the company itself is going to already be paying a lot in taxes, and I don't think it's going to have any sort of tax shelters to invest in any sort of real estate investment trusts like, say, you or somebody else that has the opportunity to invest in a Roth IRA. So that being said, he's still making $26 million a year off of store capital. It's over $500 million position, which is kind of cool. I think a lot of folks that were individual investors and are really into real estate investment trusts were really surprised and excited to see when Warren put some of his financial confidence within the real estate investment trust community. And these are some of the cool headlines that came out when Warren actually disclosed his 13F last year, and that was the fact that he has now invested in two ETFs, exchange trade funds, one of which is the Spider S&P 500, and one of other is VOO, or the Vanguard S&P 500. So he has 39,400 and 43,000 shares respectively of each of those, and I think that surprised a lot of folks because he's kind of mentioned in the past that he was going to do this if he basically did not have an opportunity to put his $128 billion cash position. But at the end of the day, it's only a $22 million position, which for Warren and the rest of his $212 billion positions here, not including the capital that he has sitting on the sidelines, I mean, we're talking about relatively small chump change with respect to that aspect of the portfolio. But even still, looking at over close to $500,000 every single year coming from income from that small investment here, which is pretty crazy. And nice to see that Warren is kind of putting his money where his mouth is. But you can see just off of what we've got here that they're already about 8.5% off their 52-week low. So I just assume that this doesn't have anything to do with the coronavirus. I think this just has to do with the fact that we've climbed so much over the past 52 weeks that we're still about 10% above our all-time lows for the last 52-week low that we've seen in the S&P 500. So that's pretty cool. But now the cool thing that I kind of want to show you guys is the one of the cool things that this spreadsheet can do is forecast out dividends for folks. And so this means a lot to me because I forecast my dividends a good bit. And it's actually kind of cool to see how Warren's dividends can kind of get forecasted out. So you can look at it a big fancy table like this. So it basically reads the tables we were just kind of looking at and puts it into reading the ex-dividend date from the website and forecasting out. So it'll look at Apple and see that it pays in February, May, and kind of puts it into how we kind of have it here. And that's kind of cool because then you can kind of be like, okay, this is when I should expect a dividend from this company, that company. And I use it for myself to track my dividends, and I just fill it in. And when I reinvest my dividends, I'm able to increase it, and you can kind of see year over year how it's going to change, and all that sort of analytic stuff if you want to get into that. But it really comes into help when you kind of look at it this way, which is the dividends by month and year over year growth. Obviously, because we don't have last year's dividends and last year's 13F, I don't really have an opportunity to kind of go back and do a retrospective over the year over year growth for his dividends. But what we do have here is the 2020-2021 forecast. So they're going to be the same because at the moment they're currently the same table, same dividends. But you can see here that you're getting anywhere between 100 to $700 every single month in terms of dividends, which is kind of crazy. Um, this happens to me as well. I think my first month of every quarter is always the lowest, then it's kind of followed by the second month of every quarter, and then the third month of every quarter is just generally absolutely insane. And I think that's kind of exacerbated by BHP or some of the semi-annual payers that I have paying in March and September as well. And so generally speaking, the outliers are March and September just by a couple $100, just based off the fact that I have a pretty big position in BHP. But looking at old Uncle Warren here, I mean, you can see that this is a pretty wild dividend growth, or not dividend growth, but pretty wild month over month dividend value that you kind of see here. I mean, you're looking at something that yields about 4.7, $4.9 billion a year. I think it is $4.7 billion every single year. So that being said, every single quarter you're getting about 1.1, $1.2 billion kind of coming into the portfolio that he can then utilize to invest either into additional stocks, stockpile it into his $128 billion cash holding, or what have you. And I think that that's a really good problem to have with respect to owning a portfolio myself. And I know for a fact that he doesn't just automatically reinvest his dividends, which is kind of cool. I think he pools his dividends, and that's something I'm going to employ myself over the coming months. But yeah, this was kind of cool to really quickly build. I mean, you could take any 13F from any company or any investor and plug this in and relatively get your numbers out quickly, which I thought was a lot of fun. And so I wanted to see if it was possible to do relatively quick with Warren Buffett's portfolio or Berkshire Hathaway's portfolio, and I found out relatively quickly that it is. But yeah, I mean, you could just start seeing some of these portfolio values just kind of trickling in. But I mean, how crazy would it be to have this actually being managed for you? $212 billion, and you're getting about $4.7 billion a year in dividends. But seriously, man, 2.2% dividend yield is a lot crazier than I thought. I thought it would be a lot higher. But hey, it is what it is. Some of the things that he's investing in are relatively low with respect to dividend income, which I can understand. But then he definitely has his financial stocks, which kind of hold up everything at the 2.5 to 3% range as well. So um, it is what it is. It was a really cool opportunity to take a quick look, and believe it or not, I was kind of updating this during when the market was open yesterday on Friday. Obviously, we had the coronavirus stuff kind of going on, and so the markets are kind of being hit by that. But it was kind of cool to see that the total portfolio value here actually dipped down to $208 billion at one point, and then it kind of landed at this 212 after the market closed, and we had that wild run up towards the end of the session there. So it's kind of cool to see that this is kind of automated now, and you have some of these prices that are actually tracking um, on instantaneously rather than what we kind of had in iCloud, which is it kind of updates once a day when the market closes. So really cool to see. I mean, there's a bunch of stuff within here, and I'll probably make a separate video about the specific items in here that you can kind of do. And another cool thing is you can kind of move your columns around and not mess anything up. It doesn't really mess up the connections in the back end of the spreadsheet or anything like that. But just kind of wanted to put these first manual things in here so you kind of had an idea as to what you need to do manually. But all these other tabs, man, all are automatically calculated for you guys. So I didn't input any of this stuff. You can see in this stuff in this the task line here that it's all kind of pulling from either Google Finance or other websites to get this information. Um, but yeah, I love utilizing this thing, and I just wanted to utilize it to show what Warren Buffett's portfolio looks like. And it was actually a really cool experiment, and I figured I would share that with you guys and show the fact that he's investing in so much financial positions. I was really taken back, almost 50% of the portfolio, and I was like, wow. I mean, I knew it was a lot, but I didn't know it was that much. So, that being said, I'm going to sign off here, guys. I'll see you guys in the next video. Cheers.